Good morning, everyone. Herve Francois here, and welcome to another episode here, Market Hunter Thursday with Herve. Today, we're taking the show to Memphis, Tennessee. Sean, welcome aboard, man. Thanks so much for being with us here this morning.
Oh, man, pleasure to be on. Thank you so much for having me on. Excited to be here with you.
Absolutely, absolutely. So listen, there are a lot of markets to choose from for single-family, multifamily investing. Tell us, why did you choose Memphis, Tennessee to build and grow your portfolio? How'd you get started there?
Yeah, great question. So I was first in Salt Lake City, Utah, a real expensive market. It's like 400,000 is the average price. So I was trying to flip and buy and hold there. It was just too crazy. Didn't make sense. I was way competitive, way too high of a barrier of entry. So I actually researched, quite frankly, like a lot of people on this show. I was one of you, right? In California, right. The West Coast markets, searching on bigger pockets, everything like that back in 2016. And right. Me, the engineer background, I, of course, took it to a spreadsheet and got a bunch of markets and looked for the best cash flow market because I wanted that, cash flow and all of that, wanted to leave my job and have passive income. Mm-hmm. So I searched the Midwest, several cities, and I had a few under my eye and then kind of narrowed it down to 2 or 3. And then I really just ended up picking Memphis because there's a lot of great markets here in the mid-South and all that. I picked Memphis, though, because I feel like it was still kind of undervalued. Had a low cost of living. The rent to value ratio was really, really high, really good, above the 1% rule, just naturally.
Right.
And also had all those big employers. So it still was a pretty big city, was growing and had a lot of development going on through those big major employers like St. Jude, Children's Cancer Research Hospital, FedEx, like you mentioned, all those big employers there. So I figured it just made sense for a good cash flow market. Then thirdly is I found a great team, a great property management company and all that. So it's really about your team as well that you can find.
In the spirit of a football analogy, and your Titans are playing pretty well right now. They beat up on my Ravens last year, but I'm not going to hold you against that. What quarter would you say are we in respect to good deals taking place in Memphis? It's been on a lot of people's radar for a while. It's been getting a lot more visibility, a lot more attention drawn to it. Are we Johnny come lately to the market right now, or some opportunities? I mean, you guys have been very busy in the market this year and the past couple of years.
Love the question, Herve. I love it. Okay, why don't we just start with the data? Here we go. 2017 average home price, $165,000. Okay. Appreciated 4.5%. Okay, 4.5% is actually, you'll be like, that's not that big for California or whatever, but for Memphis, that's pretty good.
Right.
In 2018, average home price $173,000, so it appreciated 4.4%. Then in 2019, the average home price is $181,000, and it appreciated 5%. Then year to date, right now, it's actually probably at 190, 195 is the average home price, and we're pushing into the 8-9% appreciation. So it's like people saw it, boom, 2017, 18, 19, 4 or 5%, and they're jumping in. So I think we're at third quarter, maybe starting the fourth quarter. I mean, I just feel like, though, 190,000 average home price, I mean, that's still just nothing, I mean,
right.
Especially with interest rates dropping, the average income, 44, you can afford that type of house still right now. I still think we got room to grow, maybe 20, 30% still within that average median salary that can afford the average home price. Okay. So we're not in like the, 400,000, 300,000, like these other markets where, the average income, is more than Memphis, but proportionally and ratio wise, the average person isn't able to afford those houses in these bigger cities, more expensive cities. So that's what I'm kind of feeling. I just look at the data. I don't really go by feelings. So I'm feeling good. I'm buying and holding right now. I'm feeling it's going good. I still feel like we got lots of room to grow. And it's a great place.
That's awesome. That's awesome. So, we think about it because one of the metrics I'm sure that you take a look at in deciding what markets and what areas within Memphis, besides population growth, and it's a segue from what you were just saying, is population growth. I mean, is it correct in that population growth within Memphis is beginning to hit some stagnant levels? And then there's always a lot of conversation in regards to crime in Memphis. Now, Memphis, I'm sure like many other cities around the country, I worked in New York City for 20 years and I went to high school in Baltimore, Maryland myself. I went to school in Boston. So, I've been in cities where there's obviously some nice places to invest and some nice places, not to, and things like that. How do you balance that based with that population growth that seems to be stagnant, but like you said, there's still some areas for income growth based on some strong companies you have in the area.
Yeah, I mean, transparent like any market. Memphis does get a bad rap with the crime. That's more in like kind of the inner city, the southern part of the inner city, and the northern part. So I mean, we don't do anything over there. So I mean, you got to come to the market like any market, or have a really good partner that you trust, boots on the ground that knows that place, and will steer you clear of those high crime, high theft areas. And I think that's why Memphis is so affordable. It's actually like kind of a curse and a blessing, right? Of the crime, it's like it keeps the home prices low, but the home price is low, right? It keeps them affordable and all of that because of that. So, I mean, there are A-class areas. I mean, Germantown in Memphis, Tennessee is the wealthiest per capita city in all of Tennessee, beating any neighborhood. Right. So there's still plenty of wealth in that as well. So kind of just strategically going in, there's A, B, and C neighborhoods, and you can buy and hold in all three of those. Just depends on what your risk reward tolerance and all of that, your strategy.
Awesome. So, and again, you must have known my questions ahead of time. When you start talking about those kind of strategies, I literally have it here. What kind of shift in any has there been in what you've seen investors and what you guys have been doing over the past couple of years? Seas of change in regards to sticking within single family, perhaps shifting to multifamily, mid-size or larger, and then if so, type A, B, or C properties. And that may just also have to deal with your guys' business model, whether you guys are much more cash flow centric versus appreciation centric, and how that fits within a market specifically like Memphis.
Yeah. Great question. So yeah, just giving a little background, we flip around 250 turnkey properties just available that investors buy. So it helps us give us a lot of data on rents. We also manage 2,700 doors. So we have a lot of competitive advantage because we know exactly what's selling in what zip codes and all of that and what investors are willing to pay. So on the turnkey single family side, what we're seeing with turnkey buyers is they're actually wanting to move into more of the A class. We're selling, like our average home price was usually around 80, 90,000 in the past 3 years, maybe at 100. Now we're up to like 110, 120. That's kind of going with appreciation too. But we're seeing a shift of people wanting to buy like $180,000 homes that rent for $1,450, $1,500, where that used to be harder to sell, but now those are selling pretty quickly. So I think people, and also when I looked at the data, I looked at the overall zip code appreciation, but then in the A class and B class, I think they're proportionally getting a higher appreciation, and makes sense because homeowners are buying in those areas and willing to overpay more. Like specifically where I live around Bartlett, Tennessee, it's an A class, but you can still get by with a rental in there and cash flow, not the 1% rule, but that zip code specifically appreciated 10, 12%.
Right.
So some are getting way above that general average, and that was in 2019 and probably similar this year. So, I'm seeing kind of more people who are like, I'm just going to go for the long term, go for, I'll be able to cash flow, a little bit. It's not the best, but they're more wealthier people, and they're looking for the long-term appreciation in the higher chances in the A class. That again, though, still are people buying in the C neighborhoods, and an $80,000 home rents for $750, $800. There's still plenty of demand for that as well. Great cash flow.
Sure.
Just depends on your strategy. So, I mean, we just kind of cater to everyone. We have all three.
Okay. Yep. Got it.
So
got it.
Generally what I'm seeing with turnkey buyers. And then, we're getting lots of investor activity. I think, yet again, still affordable. And so they're seeing the appreciation 3 years in a row. So they're like, dang, that works out well. I'm down for that. And I don't think it's been way too high. I mean, we haven't even pushed 200,000 yet.
Yeah. Well, what do you think is a big driver behind the move towards the type A homes, 180,000? And then are the businesses over there, is it supporting it? What has been driving a lot of, growth in Memphis that is supporting folks to move more up towards the type A $180,000 home? Is it more jobs coming on board from existing companies headquartered, and you guys have some big Fortune 500s down there, or is it a combination of that and new companies coming into the area as well?
I love it, man. You're teeing me up perfect because I look over all this stuff all the time. And it's fun. So, I mean, here it is. Coronavirus, hit us 2020. So what does everyone do? They online shop. What does Memphis do? It's the logistics hub of the universe, right? It's right inside the U.S. There's trucking, there's FedEx, shipping.
Yep. Of course.
Nike has a main distribution center. Amazon has several fulfillment centers here. Also in the northern Mississippi, is right on the outskirts of Memphis. They're all building, hiring, all of that. St. Jude, which is kind of a different industry, so it does have a medical industry sector.
Right.
St. Jude expanding $9 billion around that area for more research, more doctors and all that, and more, obviously, like little startup medical device companies are all around there too because of all the strategicness of shipping out their products and everything like that. So I think in those two sectors, they're doing well. Then thirdly, during the crash after 2008, all the builders stopped. 8, 9, 10, 12 kind of started back up. And Memphis doesn't have like these big crazy builders like Nashville or any of the builders in California. I mean, we're just building kind of slowly. So it's hasn't been really building to keep up with the new growth. Even we're not growing huge. We're growing a little bit in terms of population, but there is the demand in kind of the $250,000 to $450,000 range.
Right.
And these starter entry homes are not being built. They're building $450,000 plus homes because it makes sense for the builder.
Right.
So then there's just this big squeeze in this affordable area at like 180 to 300,000, that entry level home, and they're just not being built. And so then it's just turning around. That's why I think that's a sweet spot in that price range, is just these new home buyers can't find it. And so what I'm seeing is I've listed just a home for a friend at 190, and that was 10 grand more than what I thought it would appraise for. Sorry, at 180, and that was 10 grand more. And it got like 10 offers in 2 days and sold grand above my 10 grand above what I thought was appraisal. Yeah. So it's just seeing that. It's just a huge demand, low supply of new inventory and entry-level homes specifically, and then the jobs.
Got it. And again, I just want to remind folks to stay on board here because we're going to have some hot tips from Sean towards the end of the show. It's been a great summary in regards to single family for our investors that are interested in multifamily down there. Now we're talking about, a lot of them are in the 10 plexes, and, some folks are moved up to 30, 40, 50 and whatnot. And then the bigger groups, we're, as the Derosa group, much bigger in the 150 plus and things like that. What kind of opportunities are there for our investors wanting to kind of move upstream, whether they're looking to come in solo or with a team, would you believe?
Yeah. So giving you a little background on this, I have my partners that are on the turnkey side and on our apartment side, Jim Reedy and Brad Reedy. Jim's been in the business for 35 years. His son, Brad Reedy, is my partner with me. So they also have recently, since about past 3 years, been buying multifamilies. They've been able to acquire around 700 doors. I've been a partner on about 300 of them. Okay. Both personally and syndicating a few hundred of them. So he's kind of learned, at least in his personal opinion and what I've seen from, him mentoring me and watching that, is that this 10 to 50 unit range, it's just hard because in Memphis, it's usually, first off, there's just not a lot of multifamilies in that range, like that were built in the city. That's just how the zone was. It's a lot of single families, like even duplexes, triplexes, and fourplexes. There's not a lot built. Okay. And also specifically in that 10 to 50, even 100 range, you're going to want to watch it like a hawk. They're usually in the class areas, maybe even in Memphis. That's just how the zoning was. Mm-hmm. And so it's like you need an on-site manager, right? But at units or less, or even 100 or less, you can't really afford a full-time, $40,000, $50,000 a year salary to be on there. So it's like you almost need strategically to have a conglomerate of at least 100 units within a mile radius or 2 mile radius so you can rove around and just like what we've learned and what we've been successful at. 100 units plus, on-site manager there. We train them. They're picking up trash every day. They're memorizing tenants' faces and cars. Right. They're watching out. I mean, it's not like you just got to show up, collect the rent, knock on the doors. I mean, the basics. It's surprising how hard it is to find someone like that. Right. We're good at it and finding them and training them, right, and make sure they're doing their job. But when they can do that, you're very successful. What we've seen, those people buying these 1020s, ourselves, it's just like you get one bad tenant in there and it just kind of circulates there. Now, I'm not saying that's not good to do. I have seen success. There are some in the Midtown. So if you are going in like the A, B class, which is in Midtown Tennessee, that would be fine. I think that's in the higher end rent, where meaning like rents are above 1,000. C class, I'm talking rents are 500 to 700. Right. So if you're going higher end, you can get away with that. In my personal opinion, that's the thing. And then also just very low supply of multifamilies. I think only like 10 multifamilies even trade on the market a year. Oh, wow. 10 or 20. There's just not a lot on there in kind of the, especially in the range we want to buy. So it's like, there's that as well. And so it's just a huge demand as well. Right.
In your multifamily, what is your business model there? Is it, perhaps purchasing a type C? What are you guys going to come in, do some work, reposition it to a B plus type? Or are you looking for something with a little bit more appreciation, come in with a BB plus, and perhaps it's a light value add and you get a little bit of rent bump to bring it up to market rents in the area?
Great question. So all of ours have been like 80 to 180 units. So typically like 100, 120 units. And yeah, they've been actually big, heavy lifts. And the reason why is that out-of-state investors aren't going to do these heavy lifts. I'm talking like 15 to 20K a door renovation per unit. And we're stabilizing it. Like they're usually 60% occupied, not very well managed. Rents are like $200 below market value. So we're going in and buying kind of like a C class, like you mentioned, and stabilizing it and all of that, bringing it up to like 95% occupied, raising rents from 550 to 750 ish.
Oh, wow. Okay.
Well, how it's been.
Yeah.
We have been going in on more of the B and the A class as well. But that's the kind of what we've seen over the past several complexes we've done. And it's just kind of fit our little niche because like I mentioned, we have the management power to take care of it because we already have a property management company. The economies of scale of all of that. And then we know how to do the renovations well. And we've actually seen that there is a huge demand in the C class, affordability, but also affordability that's actually looking good. So these puppies, they're like the highest C class rents, but not super, just $50 above, but they're just the best looking, and because of the great renovation putting on them. So they're renting up quick and all of that.
I'm real glad that you brought that up because, one of our mottos for the Derosa Group is transforming lives through real estate. And, I don't know if you guys have gone through this with any of your tenants where on one hand, you have your multifamily, you go in, you do a high reno and a nice reposition, hopefully it's helping a family kind of get their feet up off the ground. They've got their job. Their life is a little bit more stable. Things begin to improve for them so much so now they can perhaps go ahead and purchase a turnkey home, from you guys, or perhaps rent a single family home from you guys. So it's real interesting because it's in the same manner that we approach, our biz. We don't have a huge slate of turnkey single family homes like you guys do, but we do go ahead and we put in programs for the tenants to work on their on their financial portfolio and really learn how to budget and save and invest and so on and so forth. Because the great story is that you can have a tenant one day leave and he or she, the family, goes and they purchase their first single family home because things that you were able to provide them for the work that you've done, right? So it's just a win-win, not only for your team but also for your tenants.
Yeah, let me touch on that, man. I love it. And that's what, of course, one of the big major rollers for us, is changing lives. I love what you mentioned there. So with the multifamily, we're going to units that are very not well managed, right? They're not only on like in terms of screening the tenants, putting them in, but also not treating the tenants well.
Right.
We'll come in and buy 100 units and 60 are occupied, and there's probably 10, 20 maintenance requests that haven't been fulfilled for months.
Yeah.
Like a leaky ceiling, a toilet that doesn't work, and there's only one bath in the house. Just the range, the stove isn't working. Just those basics, and so we're fixing those, and they're just like, "Thank you" to our maintenance guys. Like, we'll cook you a meal, and we're like, thanks. And like, so it's great seeing that, just helping them have that pride of ownership. We give them the options to live in their current unit, raise it up to just a little bit market rent, to the others, or move in another one that's already great. And most of them vouch for the upgraded unit at a higher price. Same with the turnkey side. We're screening all of our tenants and we're having them fill out a budget, right? And that's the first time they fill out a budget in their life, like a monthly, make X, I spend Y, X, Y, Z.
You see it on paper. It's real.
And sometimes we're like, you can afford this, but can you afford this?
Yes.
We feel like it's helpful, and we encourage them to build that credit score and all of that. So, and then of course our team the biggest influence you can have, as you know, is your teammates, right? And we have employees and trying to help them out and help them get houses. A lot of them, surprisingly in real estate don't own a house; they're still renting. So we're helping them out and trying to them and train them because they're obviously the easiest to influence because we're around them all the time and them out, and we know how to do it and get them set up. So we have several realtors and all that who help each other out. So it's really fun. I love that part.
That's awesome, man. That's awesome. You're changing lives. You're changing lives for the better, and you guys are benefiting. But most importantly, your tenants, your families are benefiting in very, very tough times. Right? 2020 was as difficult as could be for a lot of folks, and it continues to be very difficult. So the extent that what you do on a daily basis can go ahead and leave a positive impact for folks on a short-term and a long-term basis is absolutely huge. Absolutely huge. Listen, I know that we're coming towards the end, and I promised our audience here that we're going to get a couple of quick tips for you. Sean, if folks coming from outside of Memphis want to go in there and slowly build a portfolio, start doing some real estate investing in Memphis, what would you best recommend? How would you best recommend that they get started?
There's several ways to do it. I'll kind of knock it down just depending on your circumstance, the resources available to you, your risk tolerance. Of course, there's turnkeys. There's several turnkey providers. I myself am one. Check us out. If you're going for turnkey, you can definitely find that and check out us. Visit a few of them, look at their products and all of that. There's great ones out there. That's probably the least riskiest, but not the greatest risk reward. But it does work out for lots of people, and it's a great way to go. If you're looking to buy a single family and burr it, buy, rent, rehab, refinance, repeat, right? There's agents out there that can help you target one. There's wholesalers that you can line up with. We would love to, on the back end, property manage it for you. I'd like to say we have a pretty good track record, a pretty good, we do our best to treat you right, treat the tenant right, balance the needs of both of you. We'll shoot you straight with rents, because we also can just, go boop and see all the rentals nearby on our 2,700 doors we manage. We'd be like, hey, we manage 20 nearby. Here's the rents. There depends on what you renovate it. We could rent it for this.
Right.
So we're straight on areas and all of that too. You can kind of just get with our team and line us up on that. Of course, we'd be happy to take you out to any barbecue anytime, show you around Memphis. I have a map of Memphis video on my YouTube channel, kind of lays out the areas, just get you started.
Yeah.
If you buy with us or whatever, I don't care. As long as it helps you out, that's great. So there's that end. With the multifamily, it's pretty easy. There's just a few brokers in town that even do deals. Get on their list,
right.
Look at them and do your numbers, go from there. Also, we'd be happy to be a resource as a property manager. There's several other great ones as well in town. We manage multifamily as well.
Okay.
I'll start out, and then I guess your next things is just financing. We have some preferred lenders. You can get that list from us. Some of them are BRRRR lenders as well.
Okay.
Also turnkey lenders for the single family side. For the multifamily side, it's usually local banks. You're just going to have to go build that relationship. They tend to, on the multifamily side, steer away from outside investors unless you have a legit track record and everything like that, because they have been, they just typically, the outside investors don't realize that the rent is going to be $15,000 instead of $7,000 like they write up. We're more aware of that. So yeah. Then on the multifamily side, just be aware of your renovation. That's probably the trickiest part, because, if you mess up by $3,000, but times it by 100 doors or 50 doors,
it gets costly real quick.
The numbers. Yeah. It's almost, like most people, build up from the single, get familiar with that reno, get familiar with the market and everything like that, and go from there, or team up, something like that. So that's kind of my advice, my opinion, getting started in Memphis. But my opinion, I think it's a great market. I moved from Salt Lake City, Utah to Memphis, Tennessee in 2017, joined this team and worked my way up to partnered recently. So
congrats. That's awesome.
Yeah, thanks. And I obviously moved here for a reason, and it's been working well and up to working my way up. It's fun. Yeah.
Well, listen, we have investors not only here in New Jersey, but all over the place, because we have some of our multifamily investments outside of New Jersey, all of ours, really, the big ones. We have 140 subscribers on our Derosa Insider channel that folks are tuning into right now. We also have 27,000 subscribers on our YouTube channel. That you're on here right now, and we have your contact information right on the screen. Everyone can see your email address and your phone. What can we do for you to help you grow down there with Memphis Investment Properties?
Man, well, thank you so much for that. If you're looking for a turnkey, check us out, memphisinvestproperties.net. We have a great YouTube channel that I think is educational to anyone, whether they're buying turnkey or multifamily. We go over I just had all that zip code appreciation data, had it out. I have videos on that, areas of town. So I just think if you subscribe to our YouTube, that'd help us out. It gets the word out, makes us, get out there. Anyone looking to buy a turnkey, mention us. We also, if you're looking to partner with us on a multifamily syndication, you can email us, email me, and contact us, and we can get you on that list.
Okay.
We do have a 200 unit under contract, and we're just deciding if we're doing the due diligence. So we've bought several syndications, and we do that as well. So lots of ways to reach out, lots of ways we can benefit, and lots of ways we can give you education without working with us at all. It's fine for us. We like to provide it all and just add value. So yeah, fun chatting with you, and you guys have a good one.
All right, sounds good. Sean, take care. Safe travels. All right, everyone. Hey, listen, how about that, man? Sean Taggy from Memphis Investment Properties, excuse me. Really, really great all around. A lot of great knowledge, a lot of great education in regards to areas to think about investing in Memphis, some of those neighborhoods to also stay away from, interest in single family, how things seems to be skewing towards the type B, type A properties, because folks see their income rising a little bit over there, but they're also helpful within their multifamily properties in doing these C-type properties where Memphis Investment Properties got to do a real heavy value up, but they're all about also helping out their tenants with their financial situation, helping them understand their budgeting, and being able one day, I'm sure, to break out and buy their first single family home. So listen, guys, we're going to wrap it up here. I thank you again so much for coming on and listening this morning, talking about Memphis. Next week, this time, where our special guest speaker is going to be discussing Boston, Massachusetts, actually my old stomping grounds where I went to college. So listen, you guys stay well, be healthy, please. I will see you next week. Aim high, and happy hunting.